Yo guys, welcome back to another video and happy Tuesday. Hope everybody's having like a good trading week. Just checking if this thing's recording. So yeah, today I'm gonna be talking about time-based ranges arrays, time-based range arrays, right? Basically, this is basically a PD array, right, that I utilize personally. The same way I use imbalances in regards to price, I utilize time ranges also as PD arrays, right? Meaning when price draws back to this PD arrays, I can use that as an execution to look for lower prices, right? Without any concern of what's happening outside of time, right? So what are time-based ranges? Ranges, right? Time-based ranges are basically full quarter cycles, right? In which price draws to, meaning Q3 is always reacting off Q3 on both higher time frame and lower time frame, right? On just different cycles, right? So how you want to see this, you want to outline your dealing range, your time-based dealing range, right, would be a full quarter Q3. It can be Q1, Q2, Q3, and Q4. In this case, I'm utilizing Q3 because it's ideally the best and the easiest one to learn, right? This whole entire range, right, is like a magnet in which all further and future price deliveries within Q3 draw to and react from, meaning this full range behaves the same way as imbalances, right? Whereby price draws to them and then repels off them, draws to them and then reacts off them. You understand? You can utilize them as draws on liquidity, or you can utilize them as reaction points. Personally, I use them as reaction points, meaning I use them to set up my buyers and my executions. You understand? To simply explain it in this case, right? We on the 90-minute time frame. This is universal to whatever quarter. You can even utilize it on this big ranges. You can utilize it even for entries on the 1 minute or even on the 15 second. Does not really matter, right? Notice this Q3, this small one right here, draws to this one. What price does is it opens, draws into the range, and then repels, right? That can be seen by you identifying the full quarter range, right, of Q3, right? Identify its high and its low, right? When you want to set up bias, you only anticipate, or at bare minimum, right? You just want to see price drop back into the range, right? And as soon as price draws back to the range, then you are basically going to be looking at this dealing range right here as a premium array, a time-based range array, which is supporting lower prices, right? It's within a premium. In premium, you're looking for shorts, meaning anywhere within this range, you are only looking for lower prices, if that makes sense, right? Anything below it, right? Anything below it, unless it's at a time-based range, right, is regarded as a discount, meaning you want to avoid taking any trades that do not that are not within this range or do not react within this range, if that makes sense. For example, this Q3 right here, you can anticipate that being a continuation of Q2, right? Let's say you're still bearish, but the only way you're going to be in the most probable conditions to be looking for a specific direction within price, right? You need price to drop back into this dealing range right here, right? And then that dealing range is regarded as a premium, meaning your time-based range array, right? Anything within it is a premium array that's going to be supporting lower prices, right? But price does not need to be reacting off these PD arrays. Hence, I'm saying this dealing range on its own is treated like a PD array. Basically, I would see this the same way I see order blocks, right? This is like my little dynamic order block, or it's my time ranged order block, right? Traditionally would be outlining, if we're bearish, like this right here as an order block that should be supporting lower prices, right? But with me, I'm only utilizing the whole entire range, right? Price just needs to open, then draw to it, right? And then repel. When price opens outside this range and it opens below it, it's opening within a discount. If it opens above it, it's opening within a premium. So therefore, this becomes a discount to support higher prices. In this case, it opened below, right? So it opened within a discount, right? Then you want to see price draw into a premium, right? The discount is ideally dynamic, right? Meaning there's no fixed size in pips or levels, just anything below the range. Even if this discount can be this low right here, does not really matter. As long as price does not touch this dealing range, we're regarding it as within a discount, right? And within the dealing range is a premium. Price only needs to draw to the range and then react off it. It's just ideally better for refinement issues when it's reacting off a PD array within the range, if that makes sense, right? This high right here, right? Anything above it, this high, would be regarded as an extreme premium if price opened below. Meaning, if price was to draw higher, sweep this liquidity. As long as price does not close above this liquidity, this becomes time-based liquidity. Meaning you can utilize that liquidity for lower prices as a liquidity sweep within Q3 only. Right? It's the same way with this low right here. This low is basically an inversed, to say the least, an inverse liquidity point, whereby now sell side liquidity is behaving as buy side. We basically have a inverse liquidity sweep above price, meaning price draws higher to sweep sell side. You understand? Dynamic. You're inverting everything. Price draws above to sweep dynamic liquidity and then repels lower, right? I just simply explained this in the simplest way as breakers, right? Price opens, draws lower, and then you'd regard that liquidity as a breaker. But basically, it's sell side being inversed as buy side. It's changing or taking the characteristics of buy side, if that makes sense. You'll notice always, right? Always within these dealing ranges, there'll be a time-based PD array. If there's none, then you're not gonna regard the dealing range. There needs to be a time-based PD array, right? Price does not have to go to it for you to be bearish. It's ideally better for precision if it does. But as long as price is within this premium range, right? This premium range only applies for this, by the way. We have this type of premium and we have dynamic premium, which is made via the true opens, right? This is for your PD arrays, meaning your PD array will only hold within this range right here, right? This imbalance, when price does not draw to it, it becomes a breakaway fair value gap. And that's ideally indicating that price is in a hurry to go somewhere. As you can even see by the impulsive candles drawing lower, right? Price is basically telling you there's not enough time for us to get here and then react lower because we need to get to our next point of interest, if that makes sense, right? And a little way in which you identify potential breakaway fair value you get, right, is when price draws to the liquidity, the low of this dealing range right here, right? It draws to the low, right? Like this. And then it closes below. Most often than not, you see a candle close above and then close below. The minute it closes below, right, that range becomes a breaker. The low becomes a breaker. In other words, it becomes inversed liquidity, right? Sell side supporting lower prices. Price goes back higher to sweep sell side. I know that it sounds a bit crazy, but these markets are dynamic. That's basically how they're booking. It's just that it's very hard to see when you don't understand, and it becomes way, way easier as time goes in, right? Price draws higher to sweep sell side above, right? And then draws lower, right? Mostly people would regard this as support. That's basically true support in a way. In the easiest language, I personally don't like using these terms. This would be resistance for lower prices, right? This whole entire dealing range is behaving like a full order block. Within it, you'll have time-based PDRAs. If it's not going to be a fair value gap, it's going to be a liquidity void. If it's not going to be a liquidity void, it's going to be a volume imbalance. Any forms of imbalances have to form within this range. Above it will be time-based liquidity that will be ideally respected only within Q3. Q4 is just going to go through that high and ideally seek to target its next key point, if that actually makes sense, right? And another thing I wanted to add on, right? This time-based stealing ranges should be no more than 5 to 6 candles, meaning this stealing range right here, this full quarter range right here, this big one, right, will have a lot of candles. You cannot use it for this time frame. The minute you go to a specific time frame and these candles right here seem to be more than 5 or 6, that means that is not your dealing range for that specific time frame. That's just a full quarter cycle, right? Your time range arrays, your dealing range, right, needs to be less than 5 or 6 candles. That's how you can identify it. It's the same way with your time-based PDRAs. That quarter range, those time-based PDRAs need to be within a range that is less than 6 candles, right? The reason I'm saying 6 is because the minute you go anywhere below the 15-minute time frame, the quarters tend to break, meaning these quarters are no longer the same size. Some of them have 5 candlesticks, some of them have 6, some have 5, some have 6. You understand? Higher time frames like the 90-minute, all these quarters are even, right? And when they even, that's where your true PDRAs will form, right? But with all that being said, hopefully this made sense, right? I'm just trying this PowerPoint way because I don't know, maybe it's a bit easier and more organized in regards to learning, right? You guys will tell me if you prefer this or the most recent way, right? But yeah, hopefully everybody has a good day, and yeah, personally don't think I'll be touching the markets for the rest of this week. I'm not being ambitious in relations to what the calendar is doing, but yeah, happy trading and happy Tuesday. Hope everybody stays safe.